What's up everyone? Welcome back to another episode. Today we're going over our part 2 of how to buy a stock, where we talk about the different order types, including market and conditional orders. If we hop on the Robinhood app, you'll see that the market order will be the default order, where you can buy in both dollars or shares. To see all the different conditional orders available, you will need to click in the upper right where you see dollars in order to reveal all the different options available. Now we have the ability to choose a recurring investment, a limit order, a trailing stop order, a stop order, or a stop limit order. Yeah, it's a lot. Let's talk first about market orders because these will execute the fastest. Now in all markets, including the stock market, you will have buyers who bid on a product or service and sellers who give their asking prices. The price fluctuations you see in the stock market are all the bid and ask prices being thrown around by buyers and sellers. When there are more buyers than sellers, demand exceeds supply and prices go up. When there are more sellers than buyers, then the asking price will gradually trend downward as sellers are looking to get rid of their shares and prices are forced down. When you execute a market order, your bid price will immediately match the current asking price that you see in Robinhood or your stock app. When you place a market order, you are not worried about the actual price of the stock necessarily, especially if you're buying and holding. Market orders execute right away, so don't use this if there's a specific price you want to pay. Our first conditional order is the limit order. When you place a limit order, you are telling the exchange the exact price that you will pay for a stock, ETF, or index. This is basically the maximum price you're willing to pay on a given day. If you wanted to buy Amazon at a lower price, say $2,000 compared to the last closing price of $32.70, then a limit order can be placed set at $2,000 with the option to have the order last until market close or GTC, good till canceled, where the order will last for 90 days on Robinhood. Other brokers have a shorter duration, so be sure to check with your broker. Our next conditional order is the stop order. You will usually see the stop order as a stop loss order on the sell side. This type of order is used to prevent your stock or ETF from crashing below a certain level. If you're trading stocks, a stop loss order can help limit your losses, especially if there's a lot of volatility with the stock. When a stop loss order is triggered, your order will be submitted as a market sell order aimed to fill immediately. Once you set a specific price below the current stock price, the exchange will trigger a sell order the moment the stock reaches that sell price. One big caveat is that extremely rapid movements, especially after hours or pre-market, can have bid and ask prices fall well below your stop price and prevent it from triggering, so it is not 100%. Now a stop limit order is going to be very similar to a stop loss order, except it does not submit a market order. Instead, a limit order is submitted and you can set both the limit price and the stop price. If your stop price is hit, this will trigger a limit order where you can hopefully get a higher limit order that you can sell at. The last conditional order we will go over is the trailing stop order, where you get to maintain your upside if the stock continues to move higher. You will set a percentage of your choosing, say 10%, and Robinhood will calculate an initial stop price from there. This will be 10% below the current market price of the stock, and every time the stock moves higher, there will be a new stop price that is higher than previously. When the stock falls and hits your stop price, this will trigger a market sell order. Other brokers do give you the option to choose between a market order and a limit order after choosing a trailing stop order. You can strategically use these orders as you're scaling out of a position or deciding that there's too much risk with a particular equity due to rapid short-term price appreciations. The last conditional order on Robinhood is the recurring investment option. One of the easiest ways to become a better investor is to automate your investments and remove the psychological barriers that prevent you from investing regularly. You reduce decision fatigue and you won't have to struggle with buy and sell decisions on a day-to-day basis. Choose a frequency that is most appropriate for you based on your monthly income and expenses. And remember, you can pause or cancel the recurring investments at any time. You won't find another broker that allows for fractional share purchases of individual stock on an automated basis, so take advantage of this on Robinhood. And that's it. We've now covered all the different order types that you can select on Robinhood and other brokers. So what do you think? Will you be using the recurring investment option? Let me know down in the comments below. And don't forget to subscribe and smash that like button. It really helps out the channel, and be sure to hit that notification bell icon so that YouTube lets you know every time I release a new video. Thanks for watching. Peace.